I have overpaid in taxes a lot. This is years back, but I can tell you at one point my accountant handed me my return and I just looked at him and I went, "That's wrong. It's just off." And he said, "How?" And I said, "I don't know, but it's about $35,000 off."
What you don't know is costing you commas and zeros. Welcome to the Owner's Profit Playbook. I'm Pat Mancuso. Most entrepreneurs think their biggest challenge is growing revenue, but the real problem is the profit leaks hiding inside their business. On this show, we break down the strategies, structures, and financial blind spots that separate struggling operators from truly profitable businesses. Because building a business is one thing, but building a business that creates wealth, that's the real playbook.
Welcome to the Owner's Profit Playbook. I am Pat Mancuso. Today's episode is a little different, and I think it might be one of the most important ones we've ever done, because instead of sharing a strategy, I'm bringing you a story. A real business owner running a real company who was dead certain they had captured everything as it related to their taxes that they could. He was wrong, and what he found changes how he runs his business today. Here's why this matters. Most owners leave money on the table for one of three reasons. They don't know the opportunity exists, they were told they didn't qualify, usually by someone they trusted, or they were a little scared to go looking because it feels aggressive or too good to be true. My guest today ran into one, two, or maybe even three of those, and today he's going to walk you through what happened when he stopped assuming and started asking. Stick around because somewhere in this conversation, you're going to hear your own business. So let's get into it. But first, before we do, we're going to hear a sponsorship message today. When was the last time your employer healthcare benefits went down? Right? Never. You just eat the increase every year. Here's what most owners don't know, that you're likely overpaying by 25 to 40% right now. Mancuso Consulting Group finds those hidden savings for you without cutting benefits, without changing doctors. A few data points in under a minute, and you'll see what you've been leaving on the table. Stop eating those increases, and I just saw a report that the increases are going to continue because the insurance companies are asking for them for 2027, anywhere from 25 to 35%. Now, they may not get those, but that's what they're asking for. Go to www.reduceemployerpremiums.com, www.reduceemployerpremiums.com. So we are very excited to have our guest today. I'm going to do a quick intro here and then have Kevin tell us about his business and his business journey first.
Okay.
Kevin Graham is the owner of Suncoast One Title, one of Southwest Florida's most established independent title agencies, with offices in Punta Gorda and Port Charlotte up through Venice, Sarasota, and Bradenton. His team has been voted Best of Charlotte 12 years in a row, and they've closed thousands of transactions to every kind of market there is. The boom, the slowdown, and everything a Gulf Coast hurricane season can throw at you. Kevin's built the kind of business most owners are trying to build: durable, respectable, and locally owned. Kevin, welcome to the show.
Thank you. Appreciate it. It's nice to be here.
Well, we're super excited to have you here. Now, in full disclosure, Kevin is a client of the Mancuso Consulting Group, which is why we wanted him here, because his story is the story that I have with many business owners in our office and on our phones every week. He was generous enough to tell us and allow us to hear his story. So we're super excited. So Kevin, let's do this first. Tell us a little bit about the journey of Kevin as the business owner, as it relates to how you got into the title business and what that journey has looked like.
Okay. I actually was an insurance agent. I had a fairly successful insurance agency, and I actually ran into an old friend of mine, one of the smartest guys I've ever met. His name was Jack Rostetter, and he said, "I want to talk to you about something." And he showed me a pro forma to be in the title business. He was actually a CFO for a builder at the time and said, I've shown this to my CEO and he doesn't want to do it. But this seems like a very lucrative business that we could start. So we did. We started actually in '05, which, if you know anything about the real estate industry, '07 was really tough. '08 was really tough. But we managed to survive through it. And in 2013, I had another title agency come to me and say, I want to retire and I'm thinking about selling out and I like the way you do business. Would you consider it? So we looked at it. And honestly, the two businesses at that point were a combined about 300,000 in gross revenue. We were both very small. So we took on Suncoast One Title. They were the ones that actually were 2/3 of the business. So we used their office location and we have since grown it to 4.5 million in gross revenue over the last 10, 11, 12 years. So it's been a journey.
Well, first, congratulations on that. And we've had some market shifts and worldly things happen during that journey as well. So congratulations to you. So let me ask you a couple of questions about your business journey. So what if you had to identify two or three things that you wish you would have known, that you wish you may would have handled differently? We call them blind spots, and we all have them in that journey. Maybe give me one or two that have really jumped out.
Um, I think the biggest thing that I've found and I've learned in just working with you is that your accountant reports what you give him to the IRS. Your accountant tells you which line to put it on. Your accountant tells you which category to put it on. Um, and yeah, my accountant over the years has given me a few ideas for write-offs and things like that. But the truth is, most of the things that I've done for tax reporting and things like that have been things that I've researched and found for myself because CPAs and accountants are not there to teach you good strategies to go after savings for your business. And we're all assuming that they are. And that's
Right.
probably the big mistake.
And if there was one thing that, and we're going to come back to that, so I appreciate that piece of the conversation. If there was one thing you've learned that you would share with other business owners as to the growth, because
Oh, okay, yeah.
yeah, what I love that you talked about was you grew through acquisition. A lot of people are fearful of that, but
Mhm.
there's only a few ways to grow, and one of those ways is through acquisition. So, what have you learned in the growth?
Well, and I would tell you honestly, Pat, that to grow to 300,000, it was, yeah, it was writing a check, and buying that other business out. But to grow it to 4.5 million, that's about the people that you have. It's about finding people that really matter, finding people that really care, that really have that attention to the customer that really, they just have a heart for it. The lady I bought that other business from, she stayed on as a partner with me for almost 3 years. And the one thing that she taught me, she's passed since, was that she said, Kevin, I can teach anybody to be a good title person. I can't teach them to be a good person. And
Wow.
that's what we need to find.
I love that comment, right? And having the background that I do in real estate, obviously, you really have two customers, right? You have the client who either is buying the home or selling the home, and then in many cases, you have the relationship with the person who brought that client. In some cases,
Correct.
table, the real estate agent, or maybe the title. I mean, there's a lot of ways that those clients come to you.
Oh, absolutely. And Pat, I would tell you, we focus on referral sources. Even when I was in the insurance industry, we didn't focus on the one-offs. We didn't advertise to the general public. We always have focused on finding trusted partners that trust you with their customers. The big thing about that on the other side is that we have to make sure when we're done that their customer has been treated the way that they wanted their customer to be treated. And that's huge. And if you can't find the right team to do that, then that's where you've missed out.
And people might hear this conversation and they're not in real estate, or they're not in mortgage, or they're not in title, and yet I would make the argument as a business consultant that there's always referral sources. They're just not thinking about the potential of those referral sources, because every business has a database, and
Yes.
that database includes customers who buy services, buy products.
Yeah.
And we forget that there's a lot of products and services they need in that journey.
Yes.
And one of the things I know, this again, because our industry teaches it a lot, is that real estate is a referral business. I mean, yeah, companies run ads and yes, there's social media and all that, but at the end of the day, they're making the biggest financial decision in many cases in their life, and they're looking for that trusted partner. So I'm
Sure.
glad that
And
you brought that up.
but I would say I know in the real estate world, the one question you always hear the best realtors ask is, who do you know
Right.
that is looking to buy, sell, or otherwise invest in real estate? That is like the number one question, and it's about referrals. Get a customer that likes you, or get somebody that trusts you, and you have that endorsement, and then things become easier. But you have to
Yeah.
earn that.
So, let's talk
Hmm.
about the real conversation today that I wanted to have people hear. And we've been very blessed and fortunate, and I'm grateful to you and in the journey that basically we've been on with you over the last almost 5 years now. Actually, it
Yeah.
might be pushing five, going into six, but we started a conversation years ago about a tax credit opportunity, and that conversation has led us to other things that we can help businesses with, in terms of cost segregation, in terms of employer reduced employer benefits, and we'll talk about that in particular in a bit. But you started off in the beginning of our conversation and you were talking about the CPA and the accountant. And I always, full disclosure, caveat, let's be really clear. I'm not here to bash CPAs or
No,
accountants,
no, no.
and
And you've
neither are
worked with my
you.
accountant on things, so
Yeah,
there's yeah.
yeah, neither are you. But here's what I do know. I asked 99.9% of the business owners I have an opportunity to ask. I say, when was the last time your CPA, accountant, trusted advisor brought you a strategy to either add money to your top line or bottom line? And the answer 100% of the time is they don't. You mentioned it earlier. You went out and did research on things. How does that make you feel as a business owner?
um, you know, Part of me is a little angry about it, but part of me understands now that it's the way the industry is. So I guess I'm just a little bit more, I guess I could say disillusioned in some ways. I thought that's what accountants did is they, helped you, with your taxes. And when I say help me with my taxes, it's not about just reporting them, but what are the strategies to save on them? Like you said,
Right.
cost segregation and R&D tax credits and all of those things. Those are the blind spots that we don't know about that you hope some expert is going to bring to you, especially
Yeah.
when you pay them thousands and thousands of dollars a year.
Well, here's what we know. And I want to, for our listeners, if you haven't had an opportunity, we've done a couple of past episodes, one with Matt Pearson, who is with Excel Empire and one of the teams that we work with for some of our tax work. And then also with Ed Lyon, who is our chief tax strategist. And one of the things that they always share with me is that there's so many different things that people can take advantage of. And the fact of the matter is that the, traditional world, if you may, is in the accounting and CPA world is kind of divided into two areas. You either get super big because you have to be able to provide additional services, or you kind of stay small and you want to, continue to offer that one-on-one. The challenge with the small is there's so many things that are happening out there that it's hard to keep up with them. It's like the general practitioner versus the brain surgeon.
Very
Tax
true.
planning, tax mitigation, tax strategy is brain surgeon type of stuff. General practitioner is everything else. And you mentioned earlier, and I think this is really how we look at it. A lot of the industry that most people are exposed to right now is historical data. It's here's my tax information for the year. Now keep me in compliance, which is absolutely important.
Of
But
course.
your experience with that is what?
Um, I have overpaid in taxes a lot. Um, I will tell you, this is years back, but I can tell you at one point my accountant handed me my return and I just looked at him and I went, that's wrong. It's just off. And he said, how? And I said, I don't know, but it's about $35,000 off. I just knew the gut number I had. And he said, okay, well, let me go back and look at it. And he came back and he said, wow, you're right. So they're just punching in numbers, and we had to go back and forth on like what he was reporting and how. But most of us we're not tax experts. I asked you yesterday who can review my tax returns that my accountant prepared, because I want a second set of eyes on things. I want to know that things are, done correctly. And I'm a title guy, I'm an insurance guy. What do I know about taxes, except what I've read, and that sure doesn't make me an expert. So I guess I lost a little track of what the question started out as, but the fact is that I know that I, you know what, you don't know what you don't know. That's the real thing. You don't know what to ask. You don't know what you're missing because nobody's there to tell you what questions you haven't asked.
Yeah. Well, and we say what you don't know is costing you commas and zeros, and it's absolutely true.
Yeah,
And you also bring up a good point in that how many people actually do get a second perspective on their returns. And if I had let's hope this never happens, but if I got diagnosed with some significant disease, I'd probably get a second opinion, right?
sure. Yeah,
And so what happens though is that and I use this example, people have probably heard this before, but I always like to share it, is that Ed was sharing one time on a call where the CPA of the client was on the call and going through a tax plan. And Ed asked, there's multiple strategies, right? One of the things that we do, our teams do, is that we don't give one strategy. There might be 3 or 4 or 5 strategies that somebody wants to take advantage of, and it's their choice, right?
right.
And all of our strategies come with a guarantee. They come with audit protection, audit defense, all the things that you'd want to make sure are in place. And the CPA said, well, we don't look at that particular tax credit because it's relatively small in the scheme of things. Now, that particular tax credit is called the Augusta rule.
Oh,
And in this case, let's just use a number of 15,000. We're not going to get into the Augusta rule, what applies, all that. I'm not giving advice, CPA advice, tax advice, but the Augusta rule is out there.
no, it's something I need to look at for this year. Honestly, it's
Well, there you
yeah,
go.
yeah,
And so here's the thing, that accountant said, well, that's relatively small. And let's just say it was $15,000.
yeah.
Well, Kevin, is $15,000 small to you?
No, no,
What
it's
if
not.
$15,000 over the last 10 years is missed? Is that small to you?
Yeah, no.
And then what if
It,
that $150,000 would be on your balance sheet and now you were going to sell and you could get a multiple of 4? Is that $600,000 small to you?
yeah, that's exactly it. I will tell you, one of the most aggravating conversations I ever had was with my accountant at one point, that we talked about a cost segregation study. And he said, well, that's probably a $36,000 deduction for you. It's probably maybe only $6,000 on the bottom line. So it's not that big a deal. And I went, what? Did you just say $6,000 is not that big a deal? And
Wow.
and so to me, I go that this is the wrong way. We're going, and that's one of the reasons I called you on it.
Well, and yeah, we're not going to give specific numbers, but I think the cost seg we ended up for you was well more than $36,000. And
Yes, more
so
than 10 times that.
yeah, exactly. So we've done a number of things, and I say we, the teams that we work with. And so from that perspective, how has that impacted your business and then you personally?
Oh my, definitely it's freed up cash. That's the biggest thing. Every business goes through its ebbs and flows, and
Right.
to sit there and know that you have this, tax bill coming at you too. Gosh, t- take a couple of zeros off of what you have.
Right.
It's a big deal. Whatever. If it's $100,000 a year, that's a big number. If it's $20,000 a year, it's a big number. So what can you do with an extra 20 grand this year?
Yeah. What's interesting to me is that there's, I'm going to use the word fear. Sometimes it's lack of
Mm.
knowledge, but the Tom Wheelwright is a gentleman that I follow, and he wrote a book called Tax Free Wealth. And people hear tax free, and first they kind of, sometimes kind of get freaked out about that. And people will say, well, you need to pay your fair share, and I get all that garbage, right?
Right. Yeah.
Okay, we all pay taxes.
Right.
Go to the grocery store, go to the gas pump, go where we all pay taxes, right?
Absolutely.
And I'm not sure people realize how much tax they actually pay outside of federal and state, but people, pay taxes, right? And I live in Minnesota, and we've had this whole thing around, unfortunately, fraud and tax money going to places that it shouldn't. And I read an article by an individual who I follow, and basically he said people get upset about fraud. I'm sure you do. I know I do.
Sure.
And yet I'm not going to change it. I'm not going to stop it. I'm not going to change it. I can't impact it at all, maybe through the politicians and the people that we elect. But what he did say is you can impact how much tax you pay legally, ethically, and morally.
Without fraud.
How much tax?
Absolutely. Without fraud. Follow the rules. Just knowing the rules helps. That's the big deal.
And that's the whole big deal, Kevin, is most people don't understand there's so much out there that they could choose to take advantage of. So from your perspective as a business owner, because you also talk with a lot of business owners,
Yeah.
what's the sense about why people don't take advantage of things? We know that maybe they don't know about it, maybe they never hear about it, but outside of that, why do you think your sense of other business owners and why they struggle to maybe pull that trigger to take advantage of something?
I think you've nailed it on two fronts, really. One is they just don't know that there's an avenue out there. There's too many things, and of course, then the second is we do live in a day of fraud, and to get an advisor that says, "Oh, I can save you a bunch of money, just you're going to have to pay me." Well, that's scary because you don't know who's being honest with you, who's telling you the truth, who's following the rules, or who's just trying to sell you a bill of goods. But let's face it, you're playing with somebody's wallet, and the IRS is scary as hell. Nobody wants to mess with the IRS. Nobody wants to piss them off. So you put all that together, and it's fear, I think, is a big thing. It's fear of the fraudster that's telling you they know something better than you do, telling you they know better than your accountant does. I mean, think about that. Your accountant is like, it's like doctor, lawyer, accountant, where those are the guys that know all the rules, right? And now we're sitting there in a world that we're going, wait a minute, there's actually some tax advice out there that we could be going after that we don't have.
Yeah. Well, and you brought up a point, and I want to tag on to it. Ed Lyons is one of the chief tax strategists that we work with. It's not fraud to take advantage of a tax credit. Number
Absolutely.
one,
Yep.
if you have eligibility, if you meet the guidelines, that's not fraud. Now, there may be a disagreement on qualifications. Well, that's a conversation, right? Like sometimes people submit their tax returns and the IRS comes back and says, well, you didn't calculate this correctly. And then you go back, oh, yes, I did. So sometimes there's a disagreement on things.
Sure.
And there's remedy for that. But here's the thing that Ed says. He says, when you take advantage of something, you document it, you prepare as if you're going to get questioned on it, so that when you get questions on it, you can answer those questions.
Sure.
Now, that's not fear. That's just proactivity.
Sure.
And so, yeah, I do get the fear thing. I hear it all the time. And obviously no one wants to be audited.
No.
No, by the way, unless you commit fraud and true fraud, and there's a lot of, let's look at Minnesota. There's a lot of fraud out there, and those people need to go to jail.
Right.
The fact of the matter is, if you commit fraud like is going on in our general vicinity, you should go to jail. But if you take advantage of a tax credit or you apply a strategy, IRS may disagree with you, and you may have a penalty and interest if you took that all the way to tax court and you were found to be incorrect in tax court. That's the word. You're not, again, I'm not attorney advice.
No, and it's not criminal though to apply for it, and I mean, honestly, I'm very confident in the things that we've done, but if it did come to that, it's not showing that you were intentionally fraudulent. It just says that you applied for something and they disallowed it. Well, that's a whole different scenario.
Here's the interesting part, and I won't be able to quote the exact numbers. And this is something I really want people to hear. I think the number is like 6,000, 7,000 of actual pages of IRS code, statute, etc. There's
Okay.
hundreds of thousands of pages of guidance interpretation. Did you hear those two words? Guidance
Hundreds,
and
thousands.
interpretation.
Yeah.
And then there's all the court findings, right?
Mhm.
So there's a lot there. And what I hope people take away from this conversation is that if you're fear-based, you may be paying too much
Yeah.
taxes. You may not be seeing things that are available to you. And let's be clear, legally, ethically, those are like, you can pay the IRS less legally. It's okay.
Yes.
So I love that you brought that fear up. So
Well, and honestly, Pat, that's the big thing is too, everything that you've brought to the table. I've done my own research
of course,
and um it is legal, it is ethical.
right.
And there I remember because I used to be in the estate planning business, there was an estate tax judge that said there is absolutely nothing wrong with taking advantage every avenue for every discount that the tax code avails to you. And we're terrified of the IRS because of the fact that we're afraid we're going to get in trouble. And the reality of it is we should be asking for the tax breaks that are in the code and are legal. So that's my
Here's something interesting. The study said 93% of business owners overpay in taxes.
93%.
Do you know where that study came from?
No.
The IRS.
Wow.
Okay.
Wow.
So the IRS says 93% of business owners are not taking advantage of the tax credits they could be. And here's the thing that most people also don't understand. The tax code was built for business owners to build their businesses. Why? Because when they build their businesses, they pay more taxes.
Yeah.
Guess what? When you sell the business, the IRS is going to ask for some of that money back if you don't plan properly.
Yeah.
So yeah, it's very interesting, that whole deal. So so I want to make a transition because we just got done in the last 10 days
Yep.
taking you through a process that A, we are super passionate about, and B, it's one of those things that obviously we're in business to make money, so let's be clear. But the impact of what we're doing with businesses with this particular offering is really hugely impactful for the businesses.
Absolutely.
So I'm talking about helping business owners reduce their employer health care premium costs.
Yeah.
And when most people hear that, they go, well, I'm already getting a pretty good deal from my broker, right?
No, you're not. Sorry, you're not.
Yeah.
I was in the health insurance business. I know what premiums are doing to people.
You just came through this process. So let's talk two numbers, ballpark.
Please.
In what you were currently paying, what was about the cost savings annually?
My cost savings on this new program is about 24 to 27%. Depends on if you calculate it on last year's numbers.
Well, that's where I'm going. Yeah, because it's two different things. Because your renewal was coming up.
My renewal was coming up at 8 to 12% increase.
Yep.
And my cost savings with the new program has decreased it a little over 24%. 24.
Did you have to change benefits to your employees?
No, I made them better. I actually made them better.
And you made them better and you're paying less.
Yes.
So when you first heard about this program, even though we had done business for 5 years, were you a little skeptical?
Oh, absolutely. I mean, I came out of the industry. Think about that. I used to teach the licensing class. The way that this is structured was unheard of years ago. And I've been out of the insurance business for about 10 years. But yeah, we have always been dedicated into giving the best benefits we could afford to give our employees. We pay 90% of our employee portion. So we put good money into benefits, and to save 24% on that number, yeah, I will tell you, it's flat out. We are saving about $75,000 a year.
Well, and I'm glad that you brought that up because it's $75,000 a year, and you have how many employees that are covered?
Oh, we have 23, I think.
Okay. So
20, somewhere in there. I mean, I have 27. I think maybe only 18 are covered. I'm not sure.
well, here's the point though. You're
Yeah.
not a 500-person company.
No.
Not today anyways. And you're saving $75,000 a year. And this
Now
is
some of that is part of employee savings. I mean, we passed a lot of that on to our employees. So
understand, but you haven't reduced benefits. They're actually getting
better
benefits. They're actually going to get paid more without giving them a raise.
Yep.
And this isn't a one-time cost or
No.
one-time cost reduction. This is actually ongoing.
Year
And
after year.
So I want to share with people the just very simple structure on this is that the traditional health insurance benefits process is information's collected, they call it a census and employee census, and that information is then put out to the major carriers for bidding, and the carriers come back, and let's just take a company of Kevin's size. They have 20, let's say 20 employees. 5 are not as healthy as they could be, maybe older, they have some issues, and the rest of the 15 are maybe in that middle group. But the fact of the matter is they all get put into one pot. The benefit company comes back and gives them a premium, but here's one of the biggest differences. In the premium that comes back, the broker sees it first. Generally, the broker looks at that premium and wants to be a hero. I'm not beating up brokers, but Kevin, is this true so far?
Sure, yeah.
Premium comes back and they want to be a hero. So they go to the employer and they say, hey, you know what? It was pretty significant increase this year, but I was able to get the provider down 5%. So we're saving you money. Now, the reality of it is, did the broker make more money, Kevin? Yes or no?
Sure. They got a percentage of the increase.
Because percentage of the increase, but yet they try to be a hero. Kevin, how is the structure now? I could tell you, but you know,
if you weren't going to say it, I was, but you guys are getting paid a percentage of the savings. So everything. So the you know what, honestly, you guys don't care about the commission on the insurance as much as you're looking at how much did you save, and we're going to charge you a percentage of your savings.
Yeah.
And if we saved you more, we get paid more. If we save you less, then we get paid less.
And here's the thing. So the company that we partner with is ClaimLinks, and they had that is the one of the biggest differences is that it's not a percentage of the premium, it's a percentage of the savings. Number one. Number two, they have a vested interest to keep cost savings down. And this will blow your mind. And I was going to have it pulled up, but as you and I know, there was we had a little bit of a technical issue starting. I just saw an article that was profiling the major carrier requested increases for next year. The smallest number I saw was 30% of the major carriers.
Oh, wow. Yeah, I know ours was coming out at, I think, 14% this year. This week, it would have hit me.
And they're not going to necessarily get those because there is some regulation in the percent of increase. But the point is they're going up, and they're going to continue to go up. And so one of the things that this program does is that the company that we work with is they have a vested interest in keeping costs down, in educating. They have a vested interest in helping reduce prescription costs. And the biggest thing is it's a direct contact. There's no 800 number. There's no overseas person answering the phone. You actually have dedicated team members on their team that you and anybody on the team can call.
Pat, I would tell you the 2 stories in the last week. Now, we've only signed up 13 days ago. One, I had an employee that was having problems with our insurance carrier, Blue Cross, renewing her prescription. Somebody from ClaimLinks got on a 3-way call with the pharmacy section of Blue Cross and helped her solve the problem. Today I'm on the phone with them saying, hey, this guy's got a problem with, we just switched. So his doctor's giving him a hard time about switching insurance. Don't worry. What's his phone number? I'll call him right now.
Isn't that great?
Yeah, it's,
Yeah. Yeah. And there's very little change to the consumer. Instead of one card, they have two cards. There's a
correct.
primary and
Yep.
there's a secondary.
Yep.
So
And like I said, Pat, I got to customize some things that I didn't like about Blue Cross's plan that or about well, I don't even remember what the new carriers at, but basically they were mirroring our old Blue Cross plan.
right.
And our old Blue Cross plan, the deductibles on and co-insurance on emergency room care, in my mind, was too high. An
Yeah.
employee doesn't have control of, their kid breaks their arm, they want to go to the emergency room, and they're going to be out a full deductible or $1,000 plus their co-insurance. And I went, no, I don't want my people treated that way. Here's what I'm going to make the co-insurance or the copay. I want a copay amount for that. And they said, okay, yeah, we can do that, no problem.
And we even with making that change, you still had the significant cost savings.
Correct.
So Kevin, let's put a little ribbon on this. So if a business owner, and let me just say this before I ask you this program, and people will say, well, will my business benefit from it? I would say if you have 5 to 10 or more employees, you're definitely going to benefit significantly on it. How much up to a number? Call us. There
Right.
is so much opportunity. We're talking with a firm right now. It's a 160 person firm, and right now their projected savings is pretty close to $2 million.
Wow.
And so, what would you share, having gone through the process now? And if somebody's hearing this and they go, like, is this real or should I look at it? What would you share?
It's definitely real. There's a little bit of legwork to do. Your employees have to fill out their applications and things like that. It's not any different than any other insurance program, in that there's paperwork involved. And as far as anything I'm asking for, they're giving me. And it like you said, it sounds weird, but it's a smaller company. I know I can call my people at ClaimsLink, and they're going to answer the phone.
Yeah.
I email them, they answer. It's not going to, claims at bigbadinsurancecompany.com.
Right.
It's going to somebody that can say, this is how this works and this is how we can fix it, and here's how we'll address it.
Absolutely. And everybody, just as a reminder, keep in mind they work with all the major carriers. And if you want to stay with, let's say you're with Blue Cross Blue Shield, you can stay with Blue Cross Blue Shield, and we still get to help people with the savings on that.
Right.
So Kevin, thank you so much for sharing that story. So I prepared you for this. At the end of every one of our shows, we go through like the 2-minute drill based upon the owner's profit playbook. So I have not prepared you for this, which is really fun. So I get to throw these at you and ask for your first blush response. So are you ready?
Sure.
Okay. First one, finish the blank. The most expensive phrase an accountant can say is?
You've been as aggressive as you can be.
One thing every owner should get a second opinion on.
Oh, gosh. Taxes, definitely. Yeah. Taxes.
Biggest myth owners believe about tax credits.
That they don't apply to me.
Yeah. The moment you realized the money was real, one word for how it felt.
Holy crap. Oh, I'm sorry. That was 2.
Would you ever have found any of this and taken advantage of it on your own?
No, I read a lot about it, but didn't go after it.
To the owner who's scared to go looking, one sentence.
Oh my gosh, call Pat Mancuso.
I love that. That was not scripted.
You didn't pay for that one, no.
I did not. Assuming or asking, which one costs more?
Oh my gosh, assuming, definitely.
And
There's nothing. Am I wrong, Pat? It doesn't cost to call you, right? I mean,
No,
they can
it
call
does
you
not
and ask you
cost.
questions.
No.
And here's the other
Actually-
thing. I know I'm interrupting your questions, but the other thing is my wife has sat next to me while I've talked to you, and she goes, "Wow, I really like him." That's a big endorsement.
He's sitting next to you right now?
No. Just a lot of times she
Oh.
listens to our calls and she's like,
That's
"Wow, I
good.
really like that guy. He's very, very sharp and very direct." And yeah, so
Yeah, well, we appreciate that. Tell her thank you so much, and the check's in the mail. Finish this. The owners who win are the ones willing to.
admit they don't know everything.
Yeah, what you don't know is costing you commas and zeros. We say that all the time. So, Kevin, thank you so much for today. I do want to give you an opportunity. Obviously, you are running a great business in the Southwest Florida, always looking for more clients, always looking
Yes.
for more referral opportunities. So, how would somebody reach out to you? What would be the best way for them to contact you?
Okay, so our website is www.suncoastone.com. Our easiest number to get us at is 941-205-2270. That goes to the Punta Gorda office, but they'll reach out to me or any other office you want to be at. Like you said, we're all the way up to Bradenton, Englewood, all of those areas. So it's just easy to give out one phone number.
Well, Kevin, thanks so much. And obviously, reach out to Kevin. I have a background in real estate, title, mortgage, and I know it is important to have folks who know what they're doing in that realm. So here's my challenge to you listening, that little voice you've been hearing this whole episode, the one that's going, wait, what am I missing? Don't let it fade by tomorrow. Do one of two things: book a call with us, reach out to us, and let's look together. Or if you're not ready, we have an assessment at our website, the Mancuso Method Assessment. It's the same second set of eyes, and it'll show you where your blind spots are before you ever pick up the phone. Because here's the whole point of this show, and Kevin just lived it out loud. What you don't know is costing you commas and zeros. Go find out what you don't know. Kevin, thanks again so much. We appreciate it.
Thank you for having me.
And listeners, thank you so much for subscribing, sharing, and all the things that you do to support what we do and allows us to bring great guests to the table. Until we talk again, thanks so much, everybody. Take care.
If you're serious about building a more profitable business, make sure you subscribe to the Owner's Profit Playbook so you never miss an episode. And if you know another business owner who could benefit from this conversation, share it with them. To learn more about how we help business owners uncover hidden opportunities and strengthen their financial strategy, visit mancusocg.com. And remember, what you don't know is costing you commas and zeros.